Now let's talk about L&T Finance. That stock has been hogging the limelight, and here's the top management, Dinanath Dubhashi, the Managing Director and Chief Executive Officer at L&T Finance, only on ET now. Thanks, Mr. Dubhashi, for joining us here. Always a pleasure chatting with you. This is Nantara from the New Delhi studio. We understand your company, L&T Finance, is in the market and hoping to raise 1,500 crore rupees via NCDs. Can you confirm this for us? If yes, why are you going down this route? What do you plan to use with all the proceeds?
Sure. So, we have a balance sheet of more than 90,000 crores. And as you know, it is funded well by a mix of NCDs, other market borrowings, bank funding, etc. And we have been managing this pretty well in terms of liquidity gaps, in terms of interest rate gap. And we would have seen that over a difficult period of Q3, we managed our liquidity extremely well as the NIMs we protected. Having said that, from every crisis in the market, be it demonetization, be it RERA, be it GST, we have managed those crises, but we have also learned a new learning, and we have used those learning. So our learning from this crisis is that we need to diversify our sources of funds, both retail, so retail NCDs or ECBs or masala bonds. So we will definitely look over the next 2 to 3 years to diversify the sources of funds. Currently what we are doing is raising a small issue. You will see that 1,500 crores is what it is, hardly less than 2% of our overall balance sheet.
Okay. Mr. Dubhashi, let me just come in there, because while you were maybe in the midst of raising monies, on ground, there's been this fear, that there's a slowdown in lending by banks. So are you seeing that, and how do you also see your borrowing mix shape up over the next 1 or 2 years?
So, as I said, at the time of the results, Q3 had 3 distinct periods, if I may say so. Up to 10th of October, nobody was lending to any NBFC. It was a black swan event, 1 in 10. Let's forget it. Let's put it behind us. Between 10th of October to 10th of December, there was a period where money was available to good NBFCs, good pedigree, AAA NBFCs. It was available in less quantity and it was available little costlier. And then from 10th of December, for good NBFCs, situation has come down pretty normal. We are getting adequate bank funding. We are getting adequate funding from mutual funds. What we believe is as the situation got tough, there is a movement to safety. And I would think that funds are flowing more to AAA companies with good pedigree than others. And based on that, and also RBI helped by saying that the risk weightage on even loan companies lending by banks will now be based on ratings. So,
fair point. It's going to be based on ratings. Fair point. But while we're talking about ratings and certain sectors being more stressed than the others, I want to talk about real estate. Credit Suisse, influential brokerage firm Credit Suisse, sees real estate NPAs to be rising in this quarter, the 4th quarter. Would you agree with that? What is L&T Finance's exposure to real estate, and which segments within real estate would you say is showing more stress?
Our exposure in real estate is about 12% of our overall balance sheet, and we show it very clearly in our quarterly presentations. But more importantly, 80% of that exposure, more than 80% actually, is to A category developers. Also, a majority of that exposure is to mid-stage and late-stage projects. So, real estate, the problem is if the project gets abandoned. We are in the position of making sure that the project gets completed and sold because of the following things. 1, most of the lending is to A category. 2, most of the lending, majority of the lending is to mid and late stage completion projects. 3, a very high percentage of lending is to up to 1,500 square feet tickets. So they are not in luxury and super luxury kind, which is actually where the slowdown is. 4, in every project we control the escrow very tightly. So as bookings start happening, we start getting prepayments. So most of our projects, we actually start getting prepayments, and we control the projects extremely tightly. And last but not the least.
Okay, Mr. Dubhashi, just to take your point forward, the overall NBFC space has been a bit skittish on account of the fact that there is the slower growth for the companies that the street is sensing. So what's your sense for growth in the fourth quarter? And for L&T Finance, where will the focus area be from here on?
Our focus areas will remain the same. We focus on retailization. So rural and retail housing will be the big focus. Our real estate and infra growth is of course on very selective projects, and that too we try and sell down some of that exposure, and anything which is outside these areas we don't finance at all. And that's how we manage the less money which was available in Q3, we managed this way. That is how we will continue. Having said that, we also believe that growth rates will be moderated in the years to come. I won't definitely not comment about Q4. We are we are in March already. It will not be proper of me to comment upon Q4. But general guidance is that we have had the advantage of a large scale up in retail, and we have also had an advantage of a low base when we grew. Now that we have achieved scale, we will still gain market share definitely, but the growth will be moderated to a little bit above market growth. So you will see more moderate growth rates in top line, but let me assure you that because of the productivity that we have achieved.
I get it. Yeah, Mr. Dubhashi, take your point. Unfortunately, we're running out of time. It's always a pleasure chatting with you. Thanks so much for being so candid with the future plans at L&T Finance and what it is that your shareholders can look forward to as well. That stock right now trading at about 124 rupees a share.